Good morning, this is Tim McGowan for the Finance News Network. Stocks fell Monday in a volatile session to start a short trading week due to the Thanksgiving holiday. Fears that China may again ramp up COVID restrictions after reporting deaths from the virus weighed on markets, sending energy stocks and oil prices lower. The New York Stock Exchange will be closed Thursday for Thanksgiving and will have a shortened trading day on Friday. This week, traders will be digesting further speeches from the Fed Reserve leaders, as well as earnings reports from more retailers. In Australia today, the Treasury will release a discussion paper on the buy now, pay later sector, with multiple media outlets noting the Treasury paper will put forward its advice and thoughts on the sector, with one of the options put forward requiring providers to obtain a credit licence. The sector has been on its knees for the last 2 years on the ASX. Not sure this will help. Overnight, the S&P 500 lost 0.4%, the Nasdaq 1%. The Dow Jones Industrial average closed relatively flat, though losses on the index were mitigated by a jump in Disney shares. Shares of Disney rose more than 7% after the company announced that former CEO Bob Iger would return to the helm of the entertainment giant, replacing Bob Chapek immediately. Iger's return to Disney ends a brief and rocky tenure for Chapek, who took over the CEO role in February 2020. And Merck said overnight it will acquire cancer drug developer Imago Biosciences for a total equity value of $1.35 billion to expand its portfolio of blood disorder treatments. The offer of $36 per share for Imago represents nearly 107% premium to the company's last close. Overnight sectors were mostly higher today, with value a notable outperformer to growth. China tech and Macau-linked casinos sold off after weekend headlines showed higher new China COVID cases and the first COVID-linked deaths since May. Energy stocks were all weaker, all adding to month-to-date declines on a volatile day for oil. Oil prices rebounded for a 10-month low on Monday after Saudi Arabia categorically denied a report that OPEC was weighing an increase in output that it would help to counteract the loss of Russian supplies. Brent crude, the international benchmark, slid as much as 6% at one stage on the day before trimming its fall. In other commodity news, the world's largest natural graphite producer outside of China has warned Western supply of graphite will be constrained in the coming decade by the opaque market for the key battery material. Sean Werner, who is the Chief Executive of Australia's Syrah Resources, a Tesla supplier that operates a huge mine in Mozambique, said that the graphite market's lack of transparency over pricing was making bankers hesitant to fund new projects. And China's aluminium imports fell by almost 34% in October from a year earlier, primarily due to persistent weak demand and rising domestic output, as Reuters has reported. Note that the demand for the light metal used in the transportation, construction and packaging sectors has remained weak due to China's strict COVID restrictions. On the ASX today, the SPI futures are pointing to a 0.5% gain. This is Tim McGowan for the Finance News Network. Have a great day.